on the whole, I think the easiest out of the box solutions are all for EVM chains because they've just existed the longest. They just have the most tooling and the most kind of robust ecosystem.
Minute differences in technical architecture have seemingly gone to the wayside in exchange of like, okay, who's actually making money, or like who's using this? Or like,
so you would say that this technological indifference would extend also to EVM and SVM. It's not just L1, L2.
Welcome back to The Roll Up. I'm Robbie.
I'm Andy. Robbie and I met at the University of Florida in 2017, where we first found out about digital assets.
We learned a lot along the way, and we're bringing you face to face with the leaders of our industry.
Sit back, relax, and enjoy today's episode. Happy holidays, Happy New Year, man.
Merry Christmas. Always going to be celebrating Christmas on the 30th. Glad to be doing it with you boys.
Did you have a nice holiday, Haseeb?
I did. It was very lovely. Yeah, I can see you guys are very in the Christmas cheer. I respect that.
We
So
are.
doesn't want to let go of a holiday. I feel that.
We're gonna run it all the way through to through the new year, 2026.
Yeah, we should just go till like February. Just keep doing Christmas stuff.
We're gonna go. We're gonna be live all the way until ETH Denver.
Nice.
Haseeb, man, you came on. You gave us some great predictions last year. It feels like a natural place to start from a reflection and start with how things went last year and what went right, what went wrong.
Yeah, well, if you zoom out on 2025, technically still 2025, so we can still get our asses kicked in the last couple of days. But I'd say overall, it's been a very mixed year. We went into the year with enormous amounts of optimism. We had, presidential election. We kind of got everything that we wanted in the wish list of regulation, and yet prices, Bitcoin is like down slightly on the year. Alts really got kicked pretty hard. Everything besides, if you look at ETH, you look at XRP, they had pretty good years. BNB had a pretty good year, but almost everything else on the alt complex really just got kicked in the teeth. So it's a mixed year. It depends on really what you owned. The more that you own the majors, the less you have to complain about. But of course, this year has been the year of like everything else rallying. NASDAQ is up something like 25, 30%. AI stocks have done incredible. Gold has rallied like crazy. And yet crypto kind of seems to have been left behind. So that makes it a tough year from what everybody was expecting going into the year.
I
Now,
think
I wrote
people were definitely
at the end of
expecting a bull
25.
market.
Yeah, that's right. So at the end of 25, or sorry, at the beginning of 25, I wrote a set of predictions last year that got a lot of attention. And at the end of every year, I try to do both going back and seeing what did I get right, what did I get wrong about my previous year's predictions, and then making predictions for the next year to try to keep myself honest and try to improve as an investor. Because so much of investing is actually being able to separate out what's the narrative that everyone's telling, what's the hype that everyone's excited about, and what part of it is real and what part of it is going to end up being transient. So if you remember, like beginning of this year, everybody was excited about AI agents. That was the meta, right? It was like virtuals taking off. There was AI XPT. There was all like that was what everybody was talking about, and we were still in the era of like Zerebro and what was the word goat, and all that stuff was going crazy. And so actually most of my posts and most of the stuff that I got engagement about was talking about how I think this stuff is going to flame out pretty quickly. Now, some of the specific predictions that I made turned out to be a little bit actually too generous to the AI meme coins. So I claimed that I thought the meme coins were going to lose market share to the AI agent coins. That really didn't happen. AI agent coins kind of collapsed, like I think like end of Q1, basically. They kind of just totally got destroyed. I thought that it was going to continue through most of 2025. That was wrong. But I did say that they were going to die off by the end of the year. That was true. I also said that these chatbots, these agents would become so ubiquitous that people would get annoyed by them. And that
That one is certainly true. Twitter
that
is terrible
got
now,
became
man.
true extremely quickly. Like it went from cute to, I remember I had this analogy of it's like seeing an elephant paint. That like the first time you see an elephant paint, you're like, oh my God, like that's amazing. You see that elephant just made that painting, and then the 1,000th painting you see by an elephant, you're like, these paintings fucking suck. Like I don't want to see any more elephant art. And that's kind of where we're at now. Is that like nobody is amazed anymore at what LLMs can do. We all just hate them, Everybody hates them, and they're all like, people are now looking for signs that this was, painted by an elephant when they see anything posted that has an M dash in it. So a few other claims that I made. I thought that this idea that everyone's going to have their own trading agent or miniature hedge fund from AIs, that's not going to happen. That was correct. There's going to be a ton of scams that are going to be automated by all these chatbots. That was correct. And I claimed that software engineering agents were going to be the most impactful of anything. And so far, that seems to be true. Is that the software automation? You see how much money Anthropic's making, and Claude Code, and all of this stuff. That's where the most product market fit is for everything in AI. And I said the meme coin stuff is going to be superseded by more serious decentralized AI players like Near, Jensen, Prime Intellect, Noose Research. That seems to be happening. I don't know that it's like huge, but that seems to be the case, that most of the mind share and what people are talking about these days is there.
Yeah,
So other predictions I made. Oh,
Yeah,
sorry. Go ahead.
No, I was gonna say, I think the only positive development that we saw from any of the kind of agent meta was just a realization that that wasn't actual agents, and that whatever is gonna come next to get people interested has to be way better than whatever that was. So maybe that'll be a 2027 or late 2026 thing.
Well, so what I suspect will happen is that anytime that people see a new phase transition in abilities, right? So like that was really the first moment that you could have a fully autonomous agent interacting with people online. And that was so exciting the first time that you saw that crypto has a way that when it sees something that's genuinely new, to just go all in and be like, great, let's like make tokens around it and let's sell them to retail and let's like find a way to play a game around this thing. So it's been a while since we've seen another phase transition, right? There's no, people have talked about, oh, what about agents paying each other? What about, some kind of the agents becoming economic actors? That hasn't really happened yet. I suspect that once that does happen, that we'll see another speculative mania. It might be smaller because people have already gotten burned by the chatbot stuff and they kind of know, okay, maybe that wasn't where it's going. But when they see agents actually being economic actors, that's when I think we'll see another little mini mania. Doesn't necessarily mean that's where the long-term value is going to be, but we're not there yet. We're probably more than a year away from getting to agents actually being economic actors.
Trade on anything: economics, weather, sports, crypto, and more. All on Kalshi.com 24/7 for the world's biggest prediction market.
YEET is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at trezor.io. Another one that was kind of interesting, I don't want to kind of steal your thunder here, but this EVM market share kind of dominance one was interesting because we had all this hype around SVM L2s and move L2s and L1s.
Right.
And I mean, we don't need to throw anyone under the bus, but not many of them actually, amounted to much. But in this prediction, so you counted that as definitely right.
Yeah. So, I mean, I think the reasons why I was right were not the reasons that I originally anticipated. So I thought it's going to be this new generation of EVM chains, the monads, the mega ETHs, a bear chain, of course, also launched this year. And I thought, okay, all these new EVM chains and hyper EVM, all these new chains are going to increase the adoption for the EVM writ large. That was not really the story. The story was more that like we were in December of last year, that was the local top for Solana dominance, right? If you remember, it was right when the Trump meme coin launched that Solana hit all-time highs of 300 something. I think it touched 300. And where the Solana transaction volume was all-time high. I think that was the day that Trump launched this meme coin, was that we saw record-breaking volumes on Solana. And people thought like, okay, it's over. Solana's just going to eat everything. Solana is just going to be absolutely dominant, and it's only a one-way ratchet from here. And actually, that was the top for SVM dominance. So if you look over time, the market share of transaction volume, market share of TVL, market share of like REV, fees, MEV, everything has declined from that point. Not linearly, but it's almost like mean reversion, is that was kind of Solana had a hot hand. Solana's still good. It's still very big. It's still very important, but it's no longer really seeming like Solana's going to eat everything. So, maybe we see another resurgence, but at least right now, it's pretty clear EVM remains the dominant architecture for blockchains. And so I think that was why that one ended up being wrong. I also thought that maybe LLMs are going to have something to do with it, is that LLMs just know so much more about the EVM that maybe they're just going to make it so much easier to write programs and contracts in the EVM. That turned out to not really be part of the story, but I think it may end up mattering more going forward. So, but I think one of the claims I made was that L1s and L2s are overcrowded. They're due for a shakeout, and that people are going to stop caring about the distinction between L1s and L2s. And this felt like the year of that. It felt like the year of there's too many of these. Market is no longer giving credit for just having a L1 or an L2 that's lying in wait and doesn't have traction. And this whole idea that users don't really care. Like Robinhood was an L2, Tempo was an L1, and maybe some CT people argued about it, or some Ethereum maxis care about it, but most people don't care. Most people are like, oh, okay, fine. Corpo chain is this, Corpo chain is that. Who really cares? And so I think that that does feel like the year of these kind of tribal fights just mattering less and less as corporate interests start to matter a lot more than our kind of regional crypto battles. Like what Freud called this the narcissism of small differences. Is like the closer you are to each other, like Ethereum has more in common with Solana than we have with the rest of finance. And so, but the fights between Ethereum and Solana are like the most fierce fights, when really it should be like us against them. But that's the narcissism of small differences.
So you would say that this technological indifference would extend also to EVM and SVM. It's not just L1, L2. It's also like EVM, SVM. These are minute differences that we as crypto people care about within the industry, but broadly, these are not things that differentiate successful companies from unsuccessful.
Yes and no. I think it does matter in terms of a choice. Like the choice between L1 and L2. I think if you're a corporate, I don't think you need to be explained why you should care about this, right? If I explain to you, like, well, if you're an L2 as opposed to an L1, like, well, there's going to take longer for you to become progressively decentralized. But you're using Ethereum security as you're not using it here. You don't have your own validators. It's like, okay, well, I just wanted to put stable coins and get my I don't know about any of that. I don't, why are you talking to me? Whereas if you tell them like, okay, if you use SVM, you need to hire Rust engineers and you can't use these contracts. You need to write your own. They'll say, oh, okay, well, I'll use the other one. Like that is actually a business decision that I think a lot of these enterprises do care about. And that's part of the reason why almost all the corporate chains are EVM. Like EVM is less performant than the SVM, right? So these are not performance decisions that they're making. It's interop and ease of adoption questions that they're answering.
Yep.
So I do think that question matters from a business perspective. But L1, L2, and like to which chain or community do you swear allegiance? I don't think these corporations really care, unless they're being yelled at really, really loudly. And the thing is, like, we're not as loud as we think we are.
Yeah, and I also think a broader shift. I've got this whole return to fundamentals thing. The argument about L1, L2, or whatever it is, and even like some of the revenue meta stuff that we just kind of like joked about. Permissionless, it's all causing such a, I don't know, for lack of a better term, reality check in the space. And so these kind of minute differences in technical architecture have seemingly gone to the wayside in exchange of like, okay, who's actually making money, or like who's using this, or like which institution is adopting your technology, et cetera, et cetera.
Yeah, no, I agree with that. And the other thing, I didn't touch on it in my predictions, but this was also the year of the Ethereum revival. Right. I mean, at the time, you remember Ethereum was just down in the dumps. People were talking about L2s being parasitic to Ethereum. And I think that in a way that is part of the revenue meta, is this idea that L2s are pulling the life force away from Ethereum, and Ethereum needs to kind of pull these barnacles off of itself and emerge from the depths. And it kind of did that, right? With the whole Ethereum pivot, which now We can talk about it without it being so politicized, but at the time it was like very contentious to say, is it a pivot? Is it not a pivot? Blah, blah, blah. In retrospect, it was totally a pivot and it was good. It was successful. They did the right thing by refocusing their marketing, their storytelling, as well as the focus on scaling the L1 and supporting developers directly on top of the base chain. So that was probably one of the big stories of this year.
Yeah, we call this a bullish reversal, and this was particularly by the EF, where they did change their story. They've refocused on core priorities, improved the UX, scaled the L1, and improved blobs. And so I think as we look forward, it's like, okay, well, Ethereum is still the home of stablecoins, the most stablecoins around Ethereum, the most RWAs, the most DeFi, all of these things that we're saying are going to be the key components for a successful project in 2026. Ethereum has most of those. And as we were talking about what institutions and companies don't care about, they don't care about L1, L2. They don't really care about EVM, SVM, except for maybe some resource allocation decisions. It you mentioned stable coins are one of the things that's like, okay, I just want to deploy my stable coins somewhere. What do you think the institutions, the companies that were previously on the outskirts, looking at crypto, kind of testing the waters, dipping their toes in, and they hadn't previously gone in, now it seems like they're getting in. What are the things that stick out to them? It seems like Ethereum checks all the right boxes. They just want to deploy their stable coins. What do you think what are the things that matter the most to those companies that are now coming in?
I think the things that they care about are pretty straightforward, which is one, I want access to customers, right? Where are the people who hold stable coins? I want to get my stable coin into their hands. Second, I want it to be easy to launch, build, interop, everything. I want everything to be easy. I don't have to build a bunch of stuff myself because that's not my expertise. That's you guys are good at that. I'm not good at that. And then third, they want it to be really easy to keep track of. So they want easy indexing, they want easy accounting, they want to be able to just have some ETL pipeline that they know exactly what's happening on the chain at any given time. So Solana for quite a while had a lot of indexing issues. Now those have improved significantly this year. And so it makes it a lot more viable place for people to be launching stablecoins. But on the whole, I think the easiest out of the box solutions are all for EVM chains because they've just existed the longest. They just have the most tooling and the most kind of robust ecosystem. And that's why most of these people are choosing EVM. It's not because they love Ethereum or because they want to, be ETH aligned or whatever. It's purely a pragmatic business decisions that they see. That's where all the stablecoins are. So I should probably go there if I want to be the next big stablecoin.
Yep. Haseeb, another interesting one that I think that we also thought would have accelerated more, but maybe didn't in the same way that we thought. You marked it as a wash, was more applications following Hyperliquid and creating specialized chains. We thought kind of like this app chain, this kind of modular thesis, app chain thesis. Every app will launch its own chain. We're hearing rumblings about Polymarket maybe doing so due to some congestion on Polygon or just other kind of reasons. You probably have insight that is not able to be shared. And then others like Lighter, EdgeX, even Pump.Fund, there was rumblings about, are they going to leave Solana? But none of these really materialized in the way that I think a lot of the modern pros kind of thought. But of course, Lighter, Hyperliquid, EdgeX, these are all on the in their crypto. So yeah, I just thought that one I thought would progress more by now as well.
Yeah. No, it's a good point. And I think part of that is the reality that a lot of this infrastructure has scaled. So, if you're on Solana and you're Pump, maybe if you're looking at January when Trump meme coin launched and Solana basically fell over, you're like, shit, we got to get off of here because, I can't have the single biggest day of crypto trading on this chain in history, have my users be unable to use my platform. Right. But, after January, a bunch of people fixed a bunch of stuff. RPCs became more robust. There's just a lot of improvements that happen when people see these scaling bottlenecks. And then it's like, okay, look, is this the biggest priority? Is the biggest priority for us to create a whole new infra, create whole new indexing, create bridges, create, all this stuff. Launching a new chain is hard. It's really difficult, especially if you're not doing it from day one. If you're migrating an existing application to a new chain, that is brutally hard, right? And if you look at the examples of people who tried to migrate, almost entirely failures, right? So if you look at Unichain, if you remember, Uniswap launching Unichain, people were so excited. This is one of the things that I predicted on our own podcast, that Unichain was going to underperform. Here we are. Unichain is basically a nothing burger. There's absolutely nothing going on Unichain. Uniswap is still dominant on the primary chains where it trades, but yeah, trying to move the liquidity and move the demand and move everything over into a new platform, it's just too hard, and it's kind of not worth doing when the core business is working. So I suspect for a lot of these, if you're pumped up fund, maybe even if you're Polymarket, like launching your own chain, it's like, yeah, maybe I'll get around to it when I get around to it. But I have so many other things that are more important to just improve the product experience, get more users in the door, regulation, like all this other stuff that is existential, and moving chains is just very seldom existential.
Yeah. A couple more on 2025 here. Airdrops moved to a two-track world. Points for project with clear KPIs like DEXs and lending, while L1s, L2s moved to crowd sales. You said you nailed it. I mean, I think we don't, say less, right? Monad, huge launch. Legion blew up. Echo got acquired by Coinbase. Like, what a year for that. And then also, if you guys remember, in the end of 24, when we did our 2025 predictions about a year ago, points was everything. Hyperliquid had just done their airdrop, the biggest airdrop in history. Points were like 2024 was the year of points, and that is also seemingly completely. I mean, not completely.
Yeah, Lighter
just
dropped their
today.
Yeah, exactly. So points, for
which is
clear
great.
KPIs like DEXs, points still rule the roost. But for everything else, yeah, points are done.
And the crowd sales. I mean, Mega ETH, one of the largest ICO raises this year, Monad, and the list just goes on and on and on. I mean, yield basis, the Curve Michael's project had 200 million subscribed for a $5 million raise on Legion with Kraken. And so you just had a lot of these big launches.
Yep. Totally agreed.
Another one I thought was cool was more optimistic UIs, email onboarding in browser wallets. I mean, if people were around in 2020, 2021 using DeFi compared to now, it is mind-blowing. It is mind-blowingly better, and it's still got a long way to go. But I think, yeah, I agree. That one was definitely nailed. Stablecoin build passes 2025. Market structure doesn't. That's a crazy call because we're so close. We're so close.
That's true.
So close. And just a couple other final ones before we get to 2026. Fortune 100 companies offer more crypto products to consumers under Trump admin. Totally right. I mean, altcoin ETFs, Solana ETFs, Chainlink, Dogecoin, all these bills, and all these chains.
all the big fintech companies and a bunch of banks now offering
stablecoins, Vanguard, all these things.
Yeah.
Yeah, man. I mean, close us out on 2025. I think you were over 50% for sure. I'll give you closer to 75% here accuracy. Maybe you could argue 80%. What do you think?
Yeah, it depends on how you count the washes. So if you count the washes, 15 out of 24 is like, slightly below 70%, which I think is pretty good. If you don't count the washes, then it's like 15 out of 18, which is it is even better.
That's like my free throw percentage. So that's pretty good.
It's like 80 something. I think I did pretty well. I think the ones I got wrong were giving a little bit too much credit to the AI agent stuff. Those are my main misses. But most everything else I was able to get right. So I think it was a good year for a lot of tech. It was a bad year for prices.
Yeah.
And so I think at the end of the day, it's one of these years where the industry's forced to grow up. People are forced to look in the eye of what they're doing with respect to meme coins, respect to these, AI agent slop coins and all this other stuff, and be like, hey, what really has staying power here? And what's just, kind of a game of musical chairs that we're playing. The music stopped this year. There's no more music playing for the game of musical chairs. And so you got to actually do something productive. And I think that's the theme going into 2026 is like, let's build some real shit.
I love it.
The musical chairs will come back. The music always comes back on. It's crypto, people get bored when there's no music playing for too long. But at least for right now, that seems to be the defining vibe.
Yeah. Well, you started us off with Bitcoin over 150K by year end.
Yep.
But Bitcoin dominance decreases in 2026.
Yeah. So My view here, I mean, look, it's going to be clearly a year of financial stimulus. You've got rates coming down. You've also got um, a lot of the Trump policies actually kicking into gear next year that are going to be fiscally stimulative. And I think he probably is going to end up doing even more to stimulate going into the midterms, just to try to win some votes and kind of curry favor with voters. So I think all of that is going to end up creating a good environment for digital assets. I think also there's just some mean reversion. Is that like Bitcoin dominance at a local high, and if you just kind of chart Bitcoin dominance over a long enough time horizon, that thing is just it's a sine wave. It goes up and it goes down, and a lot of it is just sinusoidal around sentiment, reactions, vibes. I don't think it's so much that like, well, this was the year that we discovered that alts are worthless. I don't think that we discovered anything this year. I think it's more just macro kind of conspired, and the fact that the AI bid was pulling away so much capital from retail out of the crypto markets. But especially if there's an AI correction and you start to see less and less frenzy around, okay, the idea that AI is this up only category, then I think the crypto bid will come back. It's going to be rocky. It's going to be ups and downs. But I think and there's also to some degree just a catch-up trade with gold, right? And one of the things I was thinking about is like gold has had a massive rally this year, like crazy performance for gold. And at the same time, SpaceX is going to be going public soon. And of course, SpaceX, one of the things that they have said is that part of their monetization strategy is to do asteroid mining. And of course, if they successfully do asteroid mining, the big haul for asteroid mining is like an asteroid that has a bunch of gold on it. And I read somewhere that I believe all of the world's gold, all of the gold in existence could fit in a 16-yard by 16-yard cube. That is how much gold there is in the world, like that has currently already been mined. If you find one asteroid cache that has enough gold in it, now this is very unlikely, but this is literally one of the bull cases for asteroid mining, is that like asteroids have very rare minerals inside them. If you get like a crazy event with asteroid mining, or we even just discover asteroids that have like, oh, this one has a bunch of platinum in it, interesting, or a bunch of aluminum, wow, huh? I bet there's probably asteroids with gold in them too. And one indication that the world supply of gold might double from one asteroid would send Bitcoin skyrocketing.
Wow.
That's incredible because obviously there would be a capital flight out of gold and into Bitcoin. People see it as a very similar asset class, but with a fixed supply, you can't go mine an asteroid for more Bitcoin.
Yeah. So there's like weird asteroid risk to gold that people don't talk about a ton, but like all of the conditions are conspiring to make it happen, which is that Bitcoin is becoming more and more ubiquitous, and SpaceX is becoming one of the most valuable. Right now it's one of the most valuable private companies in the world, and going to be going public soon. And as they increase the space, the velocity of these kind of asteroid mining missions, before you know it, might be on people's radars.
Wow, man.
Haseeb, do you do anything like this on the Dragonfly side or Personal Angel side, going into investing in space or any?
I do not. Look, my rule is very simple: is that I leave it to the experts when I don't know what the fuck I'm talking about. I know enough to be dangerous, but not so much that I should be underwriting investments. So
yeah,
I think in anything outside of crypto, I am the dumb money. So
all right.
I try to keep it simple.
Well, before we go too deep into your predictions for 2026, I am curious about some of your biggest wins and maybe your biggest losses in 2025 for Dragonfly, if you can speak to any of them. Where you are the expert in your domain. You talked about your personal predictions, 2025, what went right, what went wrong, but as far as Dragonfly is concerned, can you talk about anything that went exceptionally well or things that fell by the wayside?
Yeah. I mean, we've had a number of projects that we invested in that have done very well. So we led the seed round of Athena, we led the seed round of Monad. So we've done a bunch of stuff that's done really well, but probably the standout for the year is Polymarket. So I mean, last year was just like, if you remember, so the 2024 election, people thought that Polymarket was basically done. It's like, okay, you got all this volume for the election, but obviously everything's going to fall off, and like nobody's going to be talking about Polymarket anymore. That was the story. At the end of last year, the story was that flash in the pan, it's one and done. We're not going to talk about this again. Come see us in 4 years. And prediction markets have gone from that to becoming just this meteoric category. And we actually put more money into Polymarket. I think it was like February that we committed more money. And this was against the chorus of people saying that, like, hey, I think it's done. I think, there's nowhere there. And that turned out to be hugely prescient. We first invested into Polymarket beginning of 24, before the big election run up. And so we're big holders in Polymarket, incredibly proud of what they've done, because they basically created the category and kind of willed it into existence. So that one is probably the biggest win of the year. In terms of biggest loss, I mean, it's venture, so you kind of lose stuff all the time. And the nature of venture is that wins and losses are they're asymmetric, in the sense that, like, you can only lose a 1x, but you can win arbitrarily big. So in that sense, like, as a VC, we really don't spend that much time thinking about our losses, because they just kind of don't matter. What really matter are the wins. But if I just say biggest loss, I mean, the one that's definitely recent is Axelar. So I'm sure everybody saw the story about Circle acquiring the DevCo of Axelar. And, Axelar, we invested at, I think it was like beginning of 22. So it was, near the top of the market. And we invested at $1 billion valuation. They went out, it kind of fluctuated around there. But then since then, all the bridging and interoperability platforms have just gotten crushed. Axelar, of course, is one of them. So down a lot in that investment. Wasn't a huge loss. I mean, it's unfortunate. And obviously, the team ended up getting acquired by Circle, and that created a lot of drama around this tokens versus equity discussion that's been increasingly happening, and now is happening around Aave as well. But that's probably the one that's most recent that comes top of mind.
Yeah, appreciate that. No, I mean, yeah, that was an interesting moment. People are now asking whether or not app tokens are even investable or not. We have to do a whole new episode on that or something.
I mean, I think a lot of that is overblown, but
I
we can talk about that separately.
Halliday is unified crypto payments. Give your users more wherever they are. Go to halliday.xyz to never write a smart contract again.
Looking for yield that stands out? infiniFi gives you just that. Deposit stablecoins and earn far more than the current savings rate. infiniFi is a battle-tested, reliable DeFi platform that is ready to go. Head to infinifi.xyz.
Hibachi is fast and private perps trading, secured by ZK with Celestia underneath. Go to hibachi.xyz to start trading today.
Next prediction for you: despite the excitement around the recent crop of fintech chains, their metrics will underwhelm. Daily active addresses, stablecoin flows, and RWAs, Tempo, Arc, and Robinhood chain will underdeliver, while Ethereum and Solana will overdeliver. Best developers will continue to build on neutral infra chains.
Yeah. So this one, this might be one of the more controversial ones. I'd say that I think people have a lot of magical thinking about tech companies launching products. If you've ever actually worked at a big tech company, or if you're a close watcher of big tech companies, you will know that they launch new products all the time, and they flop all the time, and nobody cares, because it's just like, oh, we got a team, we tried a thing, didn't work, who cares? So, like, I don't know how many people remember Facebook Pay. It still exists. You can pay people in Messenger. Almost nobody does it. I only have one person I know who like pays me in Messenger. But like, they have this feature. So does Google. Google also has a Google Pay that, like, you can pay people peer to peer using like their messaging service. I don't know if people remember their messaging service. Google has like all these companies launch products all the time, and they don't go all in on them, because, like, why would you go all in on like Google messaging? Like, who cares? Let's try it, see if it works. If it doesn't work, whatever, just kill it. Why not? So I think if you look at these three products, Robinhood Chain, Tempo, and Arc, I have not seen from any of these three a commitment that looks like they're going all in on these products. It doesn't look to me like Stripe is going all in on Tempo. It doesn't look to me like Robinhood's going all in on Robinhood Chain. And Arc, I mean, I think it'd be crazy if Circle were to try to go all in on Arc, meaning like they tried to move all USDC onto Arc and said, if you want to use USDC, go here, right? That's what it means to go all in. There are times when companies do go all in on a play like this. And if they did, I would be a lot more like, oh, shit, maybe it's going to happen. Even Libra was more of a big commitment from Meta than any of these three chains are. But I don't think any of these three are big commitments. I think they're basically flyer bets. I think if they work out, great. If they don't work out, whatever, boohoo. If you look at Stripe is going to support payments on every chain. They are not going to say, oh, if you as a merchant you want to take stablecoins, you have to use Tempo. They're going to say like, oh, if you use Tempo, maybe you get like a little, whatever, reduced fee or something. But like, where are your customers? Where's retail? Where are the people who are actually buying stuff at the point of sale? Do they have stablecoins on Tempo? No. Then okay, well, if at the point of sale they're going to have to buy stablecoins on Tempo to then send them to you, why would you do that? Why would you just be like, oh, settle with a credit card? Like that's obviously what consumers would do. And so I think for them, it's kind of a free option. They see this as a cheap way to like say like, yeah, maybe this crypto thing, maybe we have a blockchain and maybe it takes off. But if it doesn't, it's fine. We might as well launch it and see if it works. I think same thing with Robinhood. Robinhood, I don't even know what Robinhood chain is supposed to be used for. We heard about it. Haven't heard anything since.
Haven't
We
heard
just know it's going to
anything since.
exist. It's like it's an L2, and then later they'll something. I don't know. So all this stuff feels to me like these are flyer bets, and I think crypto Twitter as well as crypto commentators generally, they I think their theory of mind is just totally wrong about how these companies view chains. We're excited because they're doing our thing. And if they're doing our thing, they're so big and they have so much distribution, they're going to kill us. But their distribution, they're not trying to move their distribution into crypto. They're just trying to make money. And if crypto helps them make money, they'll use crypto. If they make money other ways, they'll do it other ways. They will all accept stables. They will all, they'll all take crypto rails, but will they go all in on having their own crypto rails become dominant? I don't believe it.
Yeah, I'm going to lump two together here. A big tech company launches or acquires a crypto wallet in 2026, and many more Fortune 100s launch blockchains, although increasingly concentrated among banking and fintech players. Expect Avalanche, expect my bags to be a standout here along OP Stack, Orbit, and ZK Stack.
Yep. So on the first point, which is, sorry, shit, what was the first one?
It was a big tech company launches or
Big
acquires
tech company. Yeah. So this is the unique window when a big tech company can actually get into the game. If they wait a year, maybe even 2 years, it's probably too late. And they will launch whatever they're going to launch into an unfriendly administration, potentially, right? It's a gamble. Now is the critical window where, I predict that Clarity is going to go into law. And that's going to give them some certainty that like, hey, we can actually do this. And there's some real regulatory safeguards around how this is supposed to work. I think you're going to also see a lot more aggressive rulemaking and guidance given by the SEC and CFTC about how you can get into this game without running afoul of those rules and regulations. And people are going to see the numbers on stablecoin penetration growing like crazy. And all of these big tech companies want a piece of that, because they just see this is an increasing part of the digital landscape that we do not own. And as it's getting bigger, it's getting real, and it's becoming legal. Well, shit, I want a piece of that. And I want to be able to connect it to everything else that I own. So I think that you're going to see a big tech company come into this game. I think Apple's probably unlikely. I would guess either Google or Facebook. But maybe Apple. I just think they're too risk averse. I think Google or Facebook are probably more likely players to enter into here. And very good chance they go through acquisition rather than building, just because it's easier to just get something that kind of works off the shelf. In terms of Fortune 100 blockchains, yeah, I think there are going to be more of those, especially among fintech and banking players, because they just all have the perception that if they do a blockchain, good things happen. And like, there's just kind of sense that like, hey, you should have a digital strategy, announce it to the world. And in case that there is a big push in tokenization or more and more RWAs coming on chain, you want to have your own walled garden with your own controls and compliance regimes and maybe even some privacy about how all of that works. So I do think Avalanche is the best positioned among the fintech and banking players because they have the most customizability around privacy, controlling the validator set, et cetera. But all these guys are making inroads with these kind of big financial players wanting to launch their own chains and get their own block space.
I got one comment on the first point about a big tech company acquiring a wallet. I think if this happens, it's going to have a lot to do with AI agents. As more of that technology where agents tend to pay one another, this is AI is becoming more and more integrated into these big tech companies. I think Google and Facebook are probably two of the leaders in that category, but I could also see someone like an OpenAI acquiring a wallet provider to then help facilitate a lot of the agent to agent coordination. So we'll see how that plays out. It might take more than just 1 year, might not happen in 26, but as this prediction plays out, I could see that becoming a part of it.
So one of my predictions within AI was that there's not going to be any agent-to-agent payments in 2026. That basically agent-to-agent payments are still too early, and it's not going to happen this year. That being said, OpenAI is a very interesting idea. Actually, I feel like I could see that, especially with Sam having a piece of WorldCoin and having these kind of broader world ambitions with the free tier of OpenAI. That would actually be very interesting. I had not considered that.
Yeah, I think you saw the WorldCoin and Tinder news. I'm
I
not
did
sure
not
if you
see
did.
that. What
So
is
WorldCoin
this?
is integrating with Tinder.
So you can verify that you're a human on Tinder dating app and no longer become catfished by an AI.
Hold on, but they only know that you're a human, right? They don't know that you're not catfishing.
Right. That is
Because they
when you
only
go on the
see your
first date.
iris, right? All they know is that your eye is not catfished.
Yeah.
The rest of you could be, an extra 200 pounds.
The catfishing is up to the eye of the beholder on the first date.
That's
It's
right.
All right, let's move into DeFi. Perp DEX market share consolidates to three big venues, a la HBO, something like 40, 30, 20, followed by a long tail of smaller players who compete over the leftovers. Earlier on the show today, I said something more like 80%, 10%, 10%. You seem to be kind of a bit more of a distributed prediction here, as well as equity perps taking off and becoming 20% of total DeFi perp volume by the end of the year. And also significant growth in RFQs versus clubs. And some crazy insider trading scandal hits the mainstream. So quite the interesting DeFi predictions there.
Yeah. I think for people who've been trading for a while, they might remember HBO. HBO was the acronym for Huobi, Binance, OKX. And so those were the three big venues back in the day before, Bybit kind of came with the big ones. Huobi fell out, blah, blah, blah. But so people used to call it HBO. And the market share at that time was roughly something like 40, 30, 20. And I think there's a famous article, I think by BCG, the consulting firm, that was written, it must have been written like in the 60s or something. And it describes this equilibrium for markets is that markets almost always end up with three big players. And usually the distribution is something like 40, 30, 20 or 40, 20, 20. And there's something about, unless there is a runaway network effect to a business, you end up getting this kind of consolidation into a few players. It's very seldom like 5 or 6 players, right? Think like credit unions, right? Or credit, or whatever, like Experian and these guys. Like there's 3, there's very often 3. And there's something special about that number that all sorts of businesses end up evolving into having these 3 big players. And even right now, if you look at Perps, right? Like we've got the 3. What's the 3? It's Hyperliquid, Aster, and Lighter. If you just look at volumes, even today after Lighter's airdrop, you see those are the big 3 that are doing meaningful volumes. So now that being said, a lot of game left to be played, and obviously incentives end up warping a lot of these numbers in the long term. So we got to see it shake out once there's some steady state with respect to incentives. But I think that's where we're going to land, because at the end of the day, exchanges are not a kind of dominance type business, right? Like if you look at Binance, like they topped out at like 50% market share. And you think like, okay, well, there's like network effects, like the liquidity, blah, blah, blah. Yeah, but it's not a network effects business. It's not one of these things where like one guy's dominant and just crushes everybody else. Even with something like Binance and Perps, there's split market share. So I think we should expect that in DeFi. Once upon a time, Hyperliquid was so much better than every other product that was out there, but give it time, right? Like there's never one of anything. There's always competitors. There's always people playing catch up. There's always people learning from what your innovations and advantages were, copying the best things, innovating at the margins, and playing for the market. And so I don't think anyone's going to be able to say, yeah, the market's all mine. There's nobody else who can really compete.
Yeah. We thought Polymarket was a runaway train, and then there comes Callchain. Now there's very clearly 2 in the market. And the principle of 3 is interesting to think about when it comes to prediction markets, because we've first we said, oh, there's only 1. Now it's like, okay, well, the 2 are so far ahead that there's no third that could come in. But We'll
There is a
see.
third. There
Yeah.
is a third, and that third is Robinhood. Right.
Yeah,
And remember, Robinhood is going to be adding their own backend to clear outside of Kalshi that they're doing in partnership with Susquehanna, which means that there will be three. It'll be Polymarket, Robinhood, and Kalshi.
yeah, and as you said, it's Lighter, Aster, and Hyperliquid right now, or in order, it's Hyperliquid, by OI, Hyperliquid, Aster, Lighter as of current, but that'll
That's right.
that'll change. Equity Perps also set to take off. Significant growth in RFQ compared to clubs. But I think most interestingly, I mean, those are both very good takes. I think the insider trading scandal that is just out of a whim is I ought to think that's got to be prediction market related, but it seems like it's not.
I think there will be something because of the growth of equity perps. That is likely to trigger much more kind of mainstream type news. Like for prediction markets, it's kind of like, oh, somebody traded on a prediction market. Like, okay, yeah, who cares? First, I got to explain to you what a prediction market is, and I got to, like that. That I think is kind of a tougher punt for mainstream news to give a shit. And then it's, oh, somebody, there's a Bitcoin whale, and they knew that Trump was going to, okay, that's kind of another complicated story. Like, is somebody going to read that and be like, yeah, clearly somebody insider traded Bitcoin? Yeah, right. But when somebody's like, oh, here's the NASDAQ index, or oh, here's Tesla stock, and somebody traded right before an announcement, that is going to make news.
Like
That
on the
is going
weekend or
to-
something, some
Exactly.
whale buys like $25 million of Tesla on Hyperliquid, and then Monday, 9 a.m. Newswire drops, and they've just
Exactly.
found gold in an
That is
asteroid.
a simple story.
And it's like, holy shit,
That
how
is
did they
a
know
very,
that?
very straightforward story, and that's something that somebody in Congress is going to care about.
And so part of your equity perps, this has been tried, but it seems like it's the right time now, and it's happening.
Well, it's already
much
starting
better
to work,
now,
right? So if you look at Trade XYZ has been going up like crazy. Ostium obviously has been doing this for a while. But Trade XYZ seems to have really cracked it open with respect to open interest, volume, and just like the attention that's building around it. And so I think you're going to see more and more growth, especially as RFQ combines with equity perps, because like if you look at Ostium today, so Ostium right now is the dominant one that's doing it RFQ style. And when you do it RFQ style, the problem with Trade XYZ is that the funding rates are very volatile, especially you go into a weekend where there's just not a lot of liquidity, and the funding rates are just moving around like crazy. And so if you want to hold a position for a long time, you have no idea how much it's going to cost you, right? I mean, the NASDAQ goes up 10% a year on average, right? Something like that. And for an asset that's going up 10% a year on average, if you're eating 15% a year negative funding, then it's like, okay, well, you don't want to hold the NASDAQ for the year, right? Now, you might have positive funding, but who knows? Like, it's just volatile, right? And you have to really be monitoring it to have a position open for a long time. Whereas for if you have RFQ, then you don't have to balance the order book in order to get a funding rate, right? Your funding rate gets quoted to you by your counterparty, and they're getting their funding rate from just their cost of capital of filling the other leg of the trade on, CME or wherever it is that they're doing the trade. And so they're kind of just a pass through, right? It's like an OTC desk basically. And so I think that is going to be increasingly how, especially for long tail stuff like RWA perps, I think that's where they're going to go. If you're trading Bitcoin, ETH, you can do a club, you can get the liquidity, and it can be good enough liquidity to match Binance, right? Because that's the primary, the primary venue is Binance. You can get close enough to the primary venue in terms of the liquidity. But for long tail stuff, you cannot replicate the liquidity of Binance in Hyperliquid or Lighter or whatever. You're just never going to do it for 500 pairs, especially when you're talking about RWAs, because then it's really long tail.
It's kind of like when you buy, let's say 3x leverage gold junior miner token because you're bullish on gold, and you hold it for 2 weeks and you don't understand how the instrument works, and you're like, gold's up 25%, this asset's up 35%, but I'm somehow down 6% on my holding, and you're like, oh, I didn't read the fine print about the decay of the rate of this instrument. It's kind of similar here with the club model, with the funding rates are so variable. You could be so right on something, but the platform that you chose to do it with the instrument was just so wrong. And so that is just not going to be, that's not going to work for people who want to do these types of things.
It depends. Like if you're a day trader and you're trading around funding rates, great. have at it. But if you're imagining that people are going to be taking long dated exposure to an index or to some stocks that, I want to hold Apple stock for the year, but I want to hold it synthetically because I'm not American, and I have stable coins. If I get on Hyperliquid and I go on Trade XYZ, then okay, I'm taking a lot of funding rate risk, and I have no idea how that's going to shake out by the end of the year. I've got to monitor it, but ideally, if you can get to the right RFQ type setup, basically somebody can lock in a funding rate and just say, I guarantee you this funding rate for the course of the year.
Love it. Stablecoins supply expands by 60% in 2026, and USD remains 99% plus. USDT dominance declines moderately to 55%, and stablecoin backed cards grow 1,000% in 2026. Insanely fast growth becomes a dominant way that stablecoins land and expand in emerging markets. Rain is the biggest winner here. We're calling this new kind of category neo finance, neo banking. Stablecoins are set to grow by at least 60%. I think that is on the conservative side.
Is that on the conservative side? I mean, stablecoins I think grew by 50 something this year. So 60% is like a slight increase in the growth rate. In principle, it should be harder to grow the more you've already grown, right? In principle, the growth rates should be decreasing. But I think actually we're going to get a stimulus of growth because of the amount of companies that now see the Genius Act getting implemented. So the Genius Act passed, but it's not actually in effect yet, right? There's like a grace period where everything gets into shape and like they kind of decide how to interpret the law into actual regulations and licenses and so on. And so I think once the Genius Act is implemented, that's going to be a sort of positive impulse for the dollar. The other thing, of course, that the dollar has declined this year. It's been a bad year for the dollar. And that should be a drag on demand for dollars globally. If next year we see the opposite and the dollar strengthening or mean reverting against some other currencies, then that should potentially be a buoy for stablecoin supply expanding. I think also just the expansion of, like you said, these sort of neobanks, these crypto neobanks, that should also be a further distribution channel for stablecoins. But I think especially for stablecoin cards. So we're big investors in Rain. So again, talking my bags here, but Rain is the biggest stablecoin card issuer in existence today, and they are growing like crazy.
We're investors in EtherFi, and they're a bit smaller than Rain, but the chart looks like just parabolic hockey stick in terms of spend, new users.
EtherFi uses Rain on the back end. So
Okay.
EtherFi, so Rain is B2B to C, right? So like they work with companies like EtherFi that then issue their own card programs, but they're doing the customer acquisition, not Rain. Rain doesn't acquire customers, they acquire businesses. Like there's so many companies like EtherFi that are going out there building their neobank offerings, and they have cards that allow you to spend stablecoins. And that last mile problem is like, okay, I get the stablecoin, that's great, I wanted dollars, but what do I do with it? The answer is like, oh, you use just a normal card, you put it into, to e-commerce site, you go swipe it at a thing, you do your tap to pay thing, and you can pay with your stablecoins now. And that simple change has changed stablecoins from like, yeah, in theory, I guess I should use these, to like, this is the easiest way. Like, for many people, they don't even know they have stablecoins. They just know they have dollars in a fintech app that they can spend with a card.
Reinforcing one of the most primitive use cases of crypto, which has been democratizing financial access. And it starts with cash, which is stable coins, is tokenized cash. And then it goes is, what can I do with my stable coins? Well, if I just want to spend it, I use one of these neobank cards. But then there's this plethora of financial apps, DeFi, that I can go and I can deploy stable coins beyond just using it for payments. So this is the stimulus for the entire industry.
That's right. That's right. So, and I think this is, again, like how stablecoins continue to get into more people's hands, which is also ties into what we were just talking about with like RWAs. When you hold stables, like right now, what can you buy with your stables if you want to invest your USD? The answer is almost all these neobanks, they offer some kind of yield product, which is, okay, maybe I put it in Aave, or maybe I like buy some tokenized treasuries or something. So that's a really easy way I can integrate yield. And then maybe I let you buy Bitcoin. Right. And that's like the investable universe that's available to you. If you're some guy in Nigeria or you're in Argentina or whatever, and you've got one of these neobanks and you're like, great, I've got two options, either treasury yield or I can, buy some Bitcoin. And I think for a lot of those people, they're like, well, I kind of want, like, can I buy an index maybe? Can I buy, the S&P? Can I buy the Nikkei? Can I buy something else, please? And RWA perps are how that happens. And so the distribution channel for these kind of long-term investors, these people are not day traders. They're not speculators. They're not here to speculate. They're here to grow their capital and then to spend it, responsibly. So I think that is going to be, again, another way in which you see these things get distributed last mile to more and more customers who have a different profile than the current set of users in DeFi who are mostly trading.
Yeah, I mean, globally as well, right? Not just in the, hot, like in the big trading hubs or the big finance hubs, in the more emerging markets, and
That's right.
just the very basic need of holding dollars
Yep.
globally is now happening. Moving to regulation, Clarity Law gets signed into law in 2026 after some significant markups and horse trading, a bit of buyer's remorse from crypto insiders. Let's start there. Buyer's remorse in which way?
Yeah, I think the Democrats know that they have a strong hand. They know that they're going to take the midterms, very likely. And as a result, I don't think they feel a lot of pressure to have to give into a deal that they don't like. So I think there's going to there's going to be some pressure from the administration to pass clarity before the midterms. And if you want to pass clarity before the midterms, the Democrats are going to have their say. And I think there's going to be some concessions that are made that the crypto industry doesn't like. Now, that being said, better to have clarity, the Clarity Act, than not to have the Clarity Act, because it does mean that, look, even if you go into a much less friendly administration, and imagine President AOC in 2028, that's not going to be a very friendly administration to crypto. But if you have Clarity Act, it's kind of baked into the bread, right? You can't undo it. But if you just have rulemaking and regulators and informal guidance, that can very easily be reversed by a new administration. So there's a lot of pressure to pass something, but in that pressure to pass something, my guess is that there's going to be some buyer's remorse. Not a ton. People will not say oh, it was a total mistake. But if you remember, back when SBF, people remember their history. Back when SBF, his first, the beginning of the end for SBF's public profile was this big fight he had over regulation. Was that he wanted to pass FIT 21 and was willing to trade in FIT 21 DeFi regulation and allow front ends to get regulated in DeFi. And that, I remember there was a big fight between him, Eric Voorhees, and the bankless guys, where they were jumping down his throat saying oh, how could you sell us out like this? We thought you believed in crypto. At that time, it was unconscionable. I think we are in a very different place today as an industry. And my guess is that we might see a similar set of trades on the table.
Yikes! Yeah, that example makes it feel much more real than just, oh, we didn't get exactly what we wanted out of this. It's oh no, we kind of shot ourselves in the foot here a little bit. Hopefully the Dems are worried about consumer protection in the ways that also embrace the crypto ideals. Yeah, exactly. The civil liberties. I think this next one here, the final one of regulation about there's a parade of hearings about anything in crypto that touch the Trump meme coin or World Liberty Finance. Dems win the House. The underlying deals get subpoenaed, and Trump insists he was never involved, didn't know anything about it, and thus these deals are not protected by executive privilege. Anyone who signed a stupid deal, which I promise you guys, these were signed, gets publicly embarrassed. Something of the sort of give us $10 million and you will get a logo on our website. These types.
That's right.
Yeah.
That's right. Yeah, there were a bunch of those. And I'm sure there's some that I don't know about from my portfolio companies that I'm going to be embarrassed to learn about. But yeah, there was. It's very clear that the right now the most animating issue for Democrats is corruption. Right? There's this narrative about the corruption in the Trump administration, and once they have the House, that means that they can hold hearings. Now, these hearings are kind of toothless, right? They can't really do anything. They can just drag you in front of Congress, but they can subpoena you, and the subpoena has the force of law. And so you have to tell them the truth because they will subpoena you to testify under oath. So when you go in front of Congress and you testify, you got to tell them what happened, and the whole world gets to laugh at you. Now, will the Justice Department do anything about it? Probably not, because it's Trump's Justice Department. They're not going to do anything. But it does open the door for, again, 2028, if things turn over, there could be some potential corruption probes that take place, so long as they don't subscribe past the statute of limitations. So there's a lot going on here, but I would expect there to be a lot of stuff around crypto corruption going into 2026, 2027.
Yeah, I mean, especially around just the general, like Trump's enriching himself to
Exactly.
Trump is enriching himself off of crypto, and this is why it's the biggest issue, kind of I mean, yeah, that's the issue. It's look at Trump's net worth before he got in office, look at it now, and look at how much of it is crypto. Also, if you've been in crypto for any time longer than a handful of years, or even just a handful of years, you can look at World Liberty Fi and you can smell something stinks over there. So prediction markets grow like crazy. Big legal fights over sports betting regulation.
We got to speed run the rest of this because I got to hop soon.
Yep. Big legal fights over sports betting regulation and federal preemption, but nothing major gets resolved next year. Status quo through 2026. Poly market continues to steamroll culture. It starts winning more and more domestic market share from Robinhood and other sports books. And the explosion of other platforms tacking on prediction markets mostly flop. Kind of a similar thesis with regards to why Arc, Robinhood Chain, and Tempo may not do as well as many think. B2B partnership-driven distribution underperforms. Direct-to-consumer outperforms. Almost all the demand of 2026 is sourced from Polymarket, Robinhood, and Kalshi front ends, as well as traditional sports books. Let's speed run prediction markets, go through AI, and let's wrap it up.
Yeah. So prediction markets, I think everybody sees the momentum now. Like it's really, everyone feels it, is that they're just winning. They're just steamrolling everything. And I think that's going to continue going into 2026. I think the biggest thing is that everybody kind of thinks that they now can do prediction markets. Is they're like, oh, wow, now that there's so much energy around this, like we're just going to build our own, we're going to launch it, we're going to see how it does. And I think what you will find, it's a little bit like, when Coinbase really started taking off, and people were like, wow, crypto is a really big thing. You had all these other applications that decided we're going to add crypto buys. And now you can buy crypto on PayPal. You can buy crypto on Schwab. You can buy crypto on blah, blah, blah. And what you find is that actually most of these products are kind of nothing burgers. Now, that doesn't mean that people don't want to buy crypto, but it means that like when they do want to buy crypto, they know where to go. They don't actually want to buy crypto on a whim in like some unrelated app. They want to buy crypto in the crypto buying app, which is Coinbase, right? And so in the same way, like when you think prediction markets, I was like, oh, I guess I want to bet on Taylor Swift, getting married or, whatever. Like you will be like, oh, I want to go on Polymarket and see what the predictions are. And there I will do my betting, but I'm not just going to like on a whim be like, yeah, you know what? I guess I do want to bet on this thing now that I saw it in like my, whatever unrelated fantasy sports app, So that's my guess, is that it's going to feel like crypto buy and sell, right? The lesson that Coinbase learned from crypto buy and sell is that even if other people add this, even if they have more distribution than us, right? Like Schwab and Fidelity have way more users than Coinbase, but Coinbase is the one that people associate with buying and selling crypto. And so when you buy and sell crypto, you want to do it through Coinbase. People they want to keep the apps separate in terms of the brands and what they use them for. And I think the same thing will be true for prediction markets.
Beautiful. Maybe just speed run us through AI and just kind of the high level here for your takes, and then we can wrap this up. It's been absolutely awesome.
Yeah. So AI, I alluded to a little bit earlier. I think that the main use case for AI is going to continue to be just software engineering. That's going to be the big, it's continued to be a theme already with Anthropic making tons and tons of money. I think it's going to continue this year. Security is going to be the main thing that touches crypto. Is that this is the year that these agents are getting good enough at cybersecurity to be used for both attack and defense. I think we're going to see more hacks in 2026, but they're going to be smaller hacks because more and more of these big hacks are going to get caught by people using defensive agents to scan their own code and scan their own software for potential vulnerabilities, and white hats being able to use this kind of scanning at scale to be able to look for vulnerabilities as well. So I think you're going to see a lot more of this integration into everything, but I think wallet automation is going to be minimal. AI agents won't be paying each other. Like you're not going to, I think most of these things will still remain prototypes. It's going to take a lot longer for these models to get good at a lot more of a general swath of things. Something we've just generally learned from AI is that actually they're getting really good, but at narrower and narrower tasks, right? They're getting really, really good at programming, but they suck at Excel. They're getting really, really good at, writing essays, but they're terrible at, I don't know, like designing things, I don't know, things like this.
Haseeb, man, thank you for joining us. 2026 is set to be, as you said, a highly liquidity friendly environment for the space, although it feels very apathetic right now. I think the sentiment is not exactly representative of the accomplishments of 2025, but mostly based on the price action. And I think my take is that, like, of all the predictions and of all the takes, I think it's going to be, I'm more optimistic than most about price action and just general growth for the industry next year than I think what the sentiment represents now. That would be my 2026 prediction. So I'm with you on the 150K by the end of the year. There's probably a poly market for that. And see you on the other side, man.
Always a pleasure. Good to see you guys. Merry Christmas.
Merry Christmas. Happy New Year, Haseeb.
Happy New Year. See you guys.
See ya. Cheers.